After having studied the first module, the students will be acquainted with the fundamentals and will be able to explain the basic concept of management accounting, understand various objectives of management accounting, learn the nature and scope of financial accounting, elaborate the nature and scope of cost accounting, understand different managerial decisions in relation to management accounting, and identify the information needs and produce financial analysis for a range of decisions. In simple terms, management accounting is meant for consumption of managers. It begins from where the role of financial accounting ends. Management accounting assists the managerial functions at all levels by providing managers with the required information so as to enable them to run the business efficiently in policy creating, controlling and decision making. It is also viewed as the field of accounting which assists managers in performance evaluation, management of costs and cost determination for financial reporting. In short, management accounting is concerned with data collection from internal and external sources, analyzing, processing, interpreting and communicating the information for use within the organization so that the management can more efficiently plan, take decisions and control the organization. To understand the concept more clearly, a definition can be the best tool. The CIMA UK defines management accounting as management accounting is an integral part of management which is concerned with identifying, presenting and interpreting information used for the purpose of formulating strategy, planning and controlling activities, decision making, optimizing the use of resources, disclosure to shareholders and other external entity, disclosure to employees, safeguarding assets. A short and pertinent definition by Robert Anthony can be considered for understanding the concept of management accounting, which explains it as being concerned with accounting of information which is useful to management. Management accounting is concerned with data which is collected from both internal as well as external sources, thereby creating a data pool. This data pool has all the desired information that the management would need to plan, control, and take decisions. Therefore, management accounting helps management in total situations. To achieve this goal, management accounting uses information collected from various sources such as financial accounting, economics, statistics, operational research, etc. With the use of all the information, desired decisions or conclusions can be drawn. For example, if business is producing two products and the management wishes to expand one product, then all the information received from financial accounting is analyzed by management accountant to take the right decision as to which product to expand or both to be equally expanded or one of the products is to be discontinued, etc. Accounting serves the purpose of providing financial information relating to a business. Financial accounting is concerned with providing information to external users such as shareholders, bankers, creditors, debenture holders, government, and tax authorities. Financial accounting is defined as the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and results thereof. The main objective of financial accounting is to provide information for ascertaining the profitability and financial position of the business. It also aims at determining the profit or loss earned by the business. The aim in recording, summarizing, and classifying the transactions is: number one, to prepare a profit and loss account and an income and expenditure account; two, a balance sheet at the end of the period. The nature of financial accounting is that it is based on double entry system and is governed by generally accepted accounting principles and rules. It is expressed in monetary units such as dollar, rupees, etc. Financial accounting is capable of giving only monetary information. It is precise in nature and deals with historical data only. It is usually on annual basis and is independent in nature. Financial accounting has got a very wide scope and area of application. Its use is not confined to the business world alone, but spreads over in all spheres of the society and in all professions. In the modern world, accounting system is practiced not only in all the business institutions but also in many non-trading institutions such as schools, colleges, hospitals, charitable institutions, trusts, etc. The professional persons like medical practitioners, practicing lawyers, and chartered accountants also adopt some suitable type of accounting methods. As a matter of fact, accounting methods are used by all who are involved in a series of financial transactions. The scope of financial accounting, as it was in earlier days, has undergone lots of changes in recent times. As accounting is a dynamic subject, its scope and area of operation have been always increasing, keeping pace with the changes in socio-economic changes. As a result of continuous research in this field, the new areas of application of accounting principles and policies have emerged: national accounting, human resource accounting, and social accounting are examples of the new areas of application of accounting system. Limitations of financial accounting. Number one, it does not provide detailed cost information. Number two, financial accounting does not have a system of controlling materials and supplies. Number three, performance appraisal of departments and employees is not possible in this system. Number four, financial records are based on historical costs and do not take inflation into consideration. Number five, necessary cost data is not provided under financial records for ascertaining the price of a product. Number six, it does not provide a basis for analyzing causes of losses. In spite of all the limitations of financial accounting, the financial accounting system includes various techniques and procedures in order to measure, describe, and communicate financial data to the users. Journals, ledgers, cash books, and other books of account are kept on a double entry system. The technique of double entry system includes generally accepted accounting principles known as GAAP, the AAS issued by the ICAI, and the IFRS, which is International Financial Reporting Standards. All of these include not only broad guidelines of general applications but also detailed practices and procedures. The term costing and cost accounting are often used interchangeably. Cost accounting is a branch of accounting which specializes in providing information about detailed cost of products or services being supplied by the entity. The CIMA UK has defined it as the technique and process of ascertaining costs. The main objectives of cost accounting are: number one, to determine the cost of a product, process, or service. 2. To analyze, classify, and record all expenditures with respect to the cost of a product, process, or service in order to determine its cost. Number 3. To provide necessary information to the management in time. Number 4. To provide data needed for periodical preparation of profit and loss account and balance sheet. Number 5. To serve as a guide by providing actual data for comparison. Number 6. To facilitate price fixation and offering quotations. Number 7. To assist in budgetary control. Continuing with the main objectives, few additional objectives are: number 1, to assist cost control and cost reduction. Number 2, to record the relative production results in each unit of plant to examine efficiency. Number 3, to provide the basis for production planning and for avoiding wastages of materials and stores. Number 4, to provide data for different periods and various volumes of output for effective planning and future expansion of business. Number 5, to provide the basis for making decisions such as to shut down or operate, to make or buy, to continue with existing plant or machinery, or to replace it. Number 6, to determine cost volume profit relationship. Number 7, to assist the management in devising suitable policy decisions in other key areas. The nature of cost accounting is that it is concerned with ascertaining the cost of product, process, division, department, or service. Cost accounting uses only quantitative data which is expressed in monetary terms. It uses various techniques such as standard costing, marginal costing, budgetary control, etc. Cost accounting is a mandatory requirement for the industries specified by the government. Cost accounting system can be installed independently. It provides a base for accounting. Scope of cost accounting. The scope of cost accounting is not as wide as management accounting. There are plenty of techniques, tools, procedures, processes, programs used in cost accounting for calculating cost and its control. But basically, we divide its scope within three major parts, namely: number 1, cost ascertainment; number 2, cost recording; number 3, cost control. Limitations of cost accounting. Number 1, more complex and complicated system of cost accounting is one of the major limitations faced by cost accounting. Number 2, many companies do not adopt cost accounting owing to the fact that it is more expensive and not economical. Number 3, uniform inapplicability of cost accounting methods and techniques is one of the main limitations of cost accounting. Number 4, it is not suitable for small scale units. Number 5. Cost accounting lacks the accuracy of its results. 6. Cost accounting fails to take into account the social obligations of the business. Number 7. Many industrial units function effectively and control the costs more effectively with the help of financial accounting only. Preparing cost accounting is unnecessary for them and it involves duplication of accounting work. Number 8. Cost accounting depends on financial statements for lot of informations. Any errors or shortcomings in the information will affect the results. Number 9. Cost accounting will not control the cost by itself. It needs an effective and efficient management to use it. Number 10. It only brings out the cost of goods or services. To find out the operational results, we need to depend on financial accounting. Cost accounting will not bring forth the financial status of the company. 11. We cannot treat cost accounting as a basis for determining the tax liability of the business. Financial accounting is required for determining tax liabilities. Objectives of management accounting. Objectives are often termed as functions of management accounting. Main functions or objectives of management accounting are being explained as under: planning. Data and information provided by management accounting helps management or managers to forecast and prepare all kinds of plans, namely long term plans, medium term plans, and short term plans, based on which appropriate strategies can be formulated. Controlling. We all know that importance of control is not only in organizations but also in our own lives. Management accounting helps in building good control through its versatile techniques such as standard costing, budgetary control, control ratios, and internal audit. Coordinating. Without coordination, nothing can succeed. With the use of carefully designed management information system, desired coordination can be brought about in various business activities and amongst all departments and units. Qualitative information. Management accounting provides qualitative information which helps in taking better decisions. Quality of goods, customers and employees, legal judgments, opinion polls, logics are some of the examples of qualitative information supplied and used by the management accounting system for better management. Continuing with the objectives of management accounting, the next objective is financial analysis and interpretations. Management accounting has several techniques such as ratio analysis, cash flow statements, trends analysis, etc. These are some of the examples of qualitative information supplied and used by the management accounting system for better management. Communication. MIS is a very important aspect of management accounting which prepares reports for presentation to all levels of management. This keeps the management abreast of all developments in key areas of the organization and also helps in taking right decisions for successfully running the business. Decision making. A decision can make or mar an organization. Good, correct, and timely decisions are critical to the success of an organization. Management accounting techniques of decision making, such as marginal costing, differential costing, discounting cash flows, capital expenditure decisions, etc., help in taking very significant decisions such as pricing of product, make or buy decisions, continue or discontinue a product decisions, repair or replace decisions. Tax policies. Good tax policies can be made only when long term goals of an organization are clear. Tax management experts rely on management reports for indulging in formulation of tax policies. Besides the objectives explained, there are three other functions of management which have been stated by Horngreen, Foster, and Datar, which are problem solving, scorekeeping, and attention directing. Nature of management accounting. Nature or characteristics of any concept arise out of its meaning and definitions. Therefore, the nature of management accounting can be drawn from the meaning and objectives as well. Number 1, it is future oriented. Although historical information is provided by financial accounting, but this information is used to make future plans and for taking critical decisions. 2. It increases efficiency as dynamic concepts such as responsibility accounting, cost centers, etc., are instrumental in increasing efficiency and control performance of personnel. 3. It establishes cause and effect relationship while analyzing a reason for loss or profit. 4. It is flexible because rigid rules or formats are not followed in management accounting, so much so that the methods to be followed and the manner in which the result would be analyzed is left to the wisdom of the user of the data. 5. It provides information and not decisions. Management accounting provides only information which must be analyzed and properly interpreted by the management for arriving at a decision. 6. Tools and techniques. It uses several tools and techniques of statistics and mathematics for presenting data. 7. It uses accounting information in such a way that suit the managerial requirements of planning, controlling, and decision making. Scope of management accounting. Management accounting has a very wide scope as it cuts across the boundaries of cost and financial accounting and covers a number of fields such as: number 1, financial accounting. For a successful and effective management accounting system, a sound and well designed financial accounting system is a must. 2. Cost accounting. Several cost accounting tools such as marginal costing, standard costing, budgetary control, etc., are used by management accounting system for arriving at decisions. Number 3, cost control and procedures. A system of management accounting is incomplete without effective cost control procedures. 4. Statistical tools. Tables, graphs, charts, and other statistical tools are used by management accounting system for preparing results and reports. 5. Reporting to management. Management accounting provides a sound reporting system to top level management. 6. Tax planning. Tax management is possible only when there is a sound management accounting system. 7. Budgeting and forecasting. Budgeting and budgetary control play a very significant role in decision making. 8. Internal audit. Management accountant has to use the internal audit report for appraising the performances at all levels. 9. Office services. Management accountant is expected to maintain and control office routines such as filing, copying, communicating, and other allied services. Let us now move on to discuss the limitations of management accounting. Number 1. It is based on historical data, therefore, results may not be accurate. 2. Quality of management accounting depends upon the level of knowledge of management accountant. 3. Management accounting is relatively a new concept, therefore, it has not fully been evolved. 4. Installation of management accounting system is a costly affair. 5. As the methods used by management accounting system are very complex, they lead to unscientific approach of decision making. Change management accounting. We all know that it is a rapidly changing environment due to which there is a need to adapt and innovate in the management accounting system as well as to cater to the needs of changing scenario. The factors which are causing change in the management accounting system are: number 1, rapid technological changes and innovations; 2, ever increasing global competition; 3, fast changing consumer demands, awareness, and taste; 4, changing governmental regulations and stricter rules; 5, more uniformity in presentation of financial data.
Financial accounting is concerned with recording, classifying, and summarizing the transactions. It provides information for ascertaining profitability and financial position. It is historical in nature. Management as well as third parties constitute the users of financial accounting information. It is independent. It is expressed in monetary units. It is based on double entry system and follows uniform rules. Emphasis is on profit or loss determination. It follows practical and normative approach. Cost accounting is the process of ascertaining costs from the first point of expenditure to the last. It helps in cost ascertainment, cost control, performance evaluation, and decision making. It uses both past and present data. It is independent but takes figures from financial accounting. It is also expressed in both monetary and physical units. It follows few principles and procedures for recording costs. Emphasis is on cost ascertainment, cost control, and cost reduction. It follows a normative approach. Let us recapitulate what we have learned in this module. Management accounting is concerned with accounting information useful for management. It provides information for decision making. It is futuristic in nature. Management is the user of management accounting. It depends on both financial accounting and cost accounting. It can be expressed both in monetary and physical units. It is not restricted to any specific accounting system. Emphasis is on planning and controlling, and it follows a practical approach.